This is Nightly Business Report with Sue Herrera and Bill Griffin.
What a week. Stocks tank again. The Dow and the Nasdaq have their worst week since the financial crisis. Now the question becomes, could a falling stock market sink the economy?
Hanging in as the housing market begins to soften, investors remain focused on one area that's still surprisingly strong: apartments.
And portfolio picks. This week's Market Monitor has three names he says will continue to gain market share even if the economy slows down. All that and much more tonight on Nightly Business Report. It's Friday, December the 21st.
Good evening, everyone, and welcome. The first day of winter brought a big chill to Wall Street. Stocks capped off a brutal week by plunging the Nasdaq right into bear market territory, and that may be the good news. That's because the broader S&P 500 is moving towards it as well. And as for the Dow and the Nasdaq, it was their worst week since the financial crisis. The Dow was down nearly 7% this week, its biggest weekly drop since October of 2008. The Nasdaq lost more than 8%, its worst since November about a decade ago. And the S&P fell 7%, its most since August of 2011. As for today, the Dow fell 414 points to 22,445. The Nasdaq dropped 3%, or 195 points, and the S&P gave back 50. Bob Pisani has more.
It was another wild session on Wall Street. The Dow closed down more than 400 points after an 850-point swing through the day. The S&P capped off its worst week in 7 years. The Dow suffered its worst week in a decade. Just 5 trading days left. December still on pace to be the worst for both indices since 1931. Today was a heavy volume day, a number of options and futures expiring all at once. That's a quadruple witching, so a lot of the selling may not be driven purely by fundamentals, but the big headlines are worth noting. First, New York Federal Reserve President John Williams took on a friendlier, more flexible tone than the markets had heard the day before from Fed Chair Jay Powell, and stocks rallied almost 400 points on those comments on the Dow, but the rally fizzled out. All the rallies have done that recently because investors have been more apt to sell into the rallies than buy on the dips. Add to that signs of a looming government shutdown, plus a stormy resignation from Defense Secretary General Jim Mattis, and finally contentious comments from White House economic advisor Peter Navarro about both the Fed and China, and all that didn't help sentiment towards the close. Naturally, stocks took on a defensive tone. Utilities led the charge, while tech and communication services stocks like Facebook, Netflix, and Twitter all led to the downside. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Now, the market declines in December have also led to concerns that Wall Street's gloom could become Main Street's doom. In other words, falling stocks could actually create an economic slowdown. The reason? The wealth effect. Robert Frank explains.
The wealth effect is the theory that when people's wealth goes up, they feel more confident and they spend more. Economists figure that for every dollar a household adds in wealth, either from stocks or their home, they spend an additional 2 to 3 cents. But the wealth effect also works in reverse, and it's even stronger on the way down. When you lose a dollar in wealth, you are likely to reduce your spending by up to 5 cents. Now, the stock market has lost over $2 trillion in market cap just in December. That could reduce spending by over $100 billion. Mark Zandi of Moody's Analytics said that if the December losses hold, the negative wealth effect could cut nearly 0.5% from GDP in 2019. And he said the effects of stock declines are greater today than in decades past because retiring baby boomers have so much invested in stocks. Now, one big caveat: real estate, which makes up the bulk of wealth for most Americans, has not fallen as much as stocks, so that could help offset any impact. Now, there are 3 sectors that would most likely be hardest hit: airlines, home improvement, building and hardware, and hotels. It turns out the first thing people do when their investments are down is reduce their vacations. For Nightly Business Report, I'm Robert Frank.
And joining us to talk more about the wealth effect is Anthony Chan, chief economist at J.P. Morgan Chase. Good to see you, Anthony. Thanks for joining us tonight. Robert,
great to be here.
Robert mentioned housing. You're also watching housing very closely for this wealth effect.
Oh, certainly. When you look at a lot of studies, and of course Robert Shiller, who's won a Nobel Prize, and others like Quigley and Case have done studies that find that the housing wealth effect is twice as strong as the wealth effect from stocks. And we know that housing prices are up. In fact, on a year-over-year basis, Case Shiller, the most accurate way of measuring housing prices, nationally are up 5.5%. Now, if you look at the S&P 500, it's down 10%. But if, again, the wealth effect is stronger for housing, these things basically wash themselves out. Let's not lose sight of the fact that energy prices are down quite significantly. And in fact, all around the world will add almost $650 billion of extra purchasing power to consumers around the world, to the extent that the U.S. consumers, the U.S. is 25% of world GDP. That means up to $160 billion worth of extra purchasing power on the part of consumers. So again, all of this should offset. And even Mark Zandi has done some studies that actually find that the wealth effect for housing is much, much stronger for housing than it is for stocks. And then finally, if you look at household net worth, it is up significantly. And don't forget that in 1987, in one single day, the stock market dropped by 22.6% on the Dow, and yet we had to wait 3 more years before we got a recession.
However, looking back on Robert's report, he points out that baby boomers, I mean, things have changed a bit since 1987 in terms of demographics. We have a lot more baby boomers who are close to, or if not in retirement at this point, and they have an awful lot of their money in the stock market. So isn't there a disproportionate effect for them in terms of what the wealth effect from the stock market would do to them as the market goes lower?
Oh, there's no question that it's going to have a disproportionate effect on those individuals. But remember that if you look at household net worth all the way back to when this economic expansion began, we're talking about a $49 trillion increase. We're now at $109 trillion. We're talking about a $2.5 trillion reduction in market cap in the equity market. And of course, that's not all U.S. consumers. We know we have foreigners, we have institutions. So when you look at these numbers in the greater context of how much wealth has been created since this bull market began, or since this economic expansion began, it is not all that significant. And finally, look at what happened to consumer confidence today. It looks like consumers have not gotten the memo that the stock market is coming down.
True.
Because the University of Michigan is pretty strong.
Anthony Chan. Anthony, thanks so much.
Aloha.
Yes, aloha and happy holidays all at once. Anthony Chan with J.P. Morgan Chase.
The other thing that the market is keeping an eye on is the funding fight in Washington over the border wall. Now, if a deal cannot be struck by midnight, parts of the federal government will shut down. John Harwood joins us from D.C. this evening. At least they have been talking late in the day. Where do we stand right now, John?
I think, Bill, it's likely that the government is going to shut down. That is the 25% of the government that hasn't been funded already. But talks are ongoing, and nobody is ruling out, Democratic, Republican, House, Senate, White House, nobody's ruling out the possibility of some sort of deal tonight. It's just that we don't have one yet. Talks still going on the Senate floor, over in the House, and, of course, with the President, Vice President Pence, and others in the administration.
So handicap it for me, John. Is there still a chance that the president gets at least some funding for the border wall, or not?
Well, I think the president has a chance of getting some funding for border security. As of now, provisions in Homeland Security spending legislation have barred money to go for a concrete wall. Now, the president has instead been suggesting it will be steel slats that you can see through. That's something different than he talked about in the campaign. So it's possible there's some wiggle room in terms of what you call what the money is going for. That's where a compromise will lay, if there is one that's achieved.
But if there is no compromise or a path to progress, as they've been trying to work on here, what happens at midnight tonight?
Well, not all that much, because, of course, we're going into the weekend. That reduces the stakes of a shutdown. And, of course, 75% of the government is funded. However, if nothing is reached over the weekend, the House is out until at least noon tomorrow. If no deal is reached over the weekend, then this has the potential to drag all the way to early January when we come back with the new Congress, and the standoff would resume then.
All right. John Harwood, on the case. Thanks, John. We'll see you later.
Stocks actually got a lift in the morning after New York Fed President John Williams said the central bank is open to rethinking its stance on interest rates. He sat down with our Steve Leisman.
For a few moments today, it appeared as if New York Fed President John Williams would play the role of Santa Claus, igniting that Santa rally which often happens at year end. And markets did rally strongly while Williams sat for a CNBC interview and said the Fed is listening to the negative message on the outlook emanating from markets these days, and that the central bank is not locked in to a path of tighter monetary policy.
We are listening very carefully to what's happening in markets for two reasons. One is financial conditions have important influence on the economic outlook, and we take that into account and think seriously about that. Second, I think we are hearing something important from markets, and that is a concern around risks to the economy and potential slowdown further than we currently expect in our base case.
Markets pay close attention to Williams, who's one of the most important members of the Fed. He serves as the vice chairman of the rate-setting Federal Open Market Committee. He added to his gifts, saying there is flexibility in the Fed's controversial plans to reduce its balance sheet next year by $600 billion.
We do view that the movements in the federal funds rate is our primary instrument to adjust monetary policy in this baseline outlook. If there's a material deterioration in the economic outlook, obviously we will reconsider our path for the short-term interest rate and would adjust policy to best achieve our goals. But we also said that we would reconsider the balance sheet normalization and may even end that process.
The Fed had purchased trillions of dollars of Treasury and mortgage securities during the financial crisis to help drive down interest rates. It's now letting those securities roll off as they expire, shrinking its balance sheet. But markets are concerned this is adding pressure to the sell-off and to the economy. At his press conference on Wednesday, Fed Chairman Jerome Powell had said the balance sheet plan was essentially on autopilot. But markets rallied strongly during the Williams interview, however briefly, later selling off as other concerns like the government shutdown seemed to take over. The conclusion may be soothing words alone from the Fed will not be enough to divert Santa's sleigh and ensure jolly old St. Nick stops this year on Wall Street. For 90 Business Report, I'm Steve Leisman.
Time to take a look at some of today's upgrades and downgrades. Altria was downgraded at Citi to sell from neutral today. The analysts there are saying that Altria's $13 billion stake in e-cigarette maker Juul effectively signals Altria has doubts about the future of its core business. Price target now $45 a share. Shares closed at $49.09. That was down more than 2.5% in today's trade. And JP Morgan is raising its rating on Nike to overweight from neutral following that company's earnings that we told you about last night. The analyst cited the valuation of shares as attractive following that pullback we've seen in the stock since September. His price target now $85, and Nike closed at $72.37 today. That was up 7%, very strong.
Following the U.S. indicting a pair of Chinese nationals for hacking American businesses and engaging in economic espionage, China has fired back strongly. Eunice Yoon has the reaction out of Beijing.
Beijing has come out swinging to fight the U.S. charges of corporate espionage. The foreign ministry issued a statement today saying the U.S. has made up facts and created noise, and argued that the Chinese government has never participated or supported anyone in any way in corporate cyber theft. The ministry countered that the U.S.'s large-scale cyber spying is an open secret and that China would never accept these accusations. Beijing's sharp rebuke comes after the U.S. Justice Department alleged that two Chinese nationals conducted a global campaign of cyber theft against the U.S. and its allies. U.S. prosecutors say the two are linked to the Chinese government, targeting 45 American tech companies, the U.S. military, and agencies like NASA. Sources told Reuters that the hackers used IBM and HP enterprise servers to reach customer clients. Neither company would speak specifically about the claims, but said customer security was a priority. The UK, Australia, and New Zealand all joined the U.S. criticizing Beijing. China slammed their remarks too, calling them slanderous. The state media here has also been critical, blaming the U.S. of, quote, cultural arrogance. The argument is that America's elite can't fathom the idea that China can achieve its own economic rise without stealing American technology. Difficult to say how all this is going to make the environment conducive to trade talks. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And up next, the slowdown in housing is causing unexpected strength in apartments. A look at how investors are taking advantage.
The recent weakness in home sales has investors kind of surprised about strength in another housing sector. Diana Olick has more from Washington.
Barely a year ago, as construction cranes swarmed over major U.S. cities, investors and analysts worried and warned that the rental apartment market was overheated and overbuilt. Just a year later, they are surprised at how strong the market still is.
The demand has been better than expected. It's been a stickier tenant base, and pricing power at that tenant base, again, in the face of elevated supply, has simply surprised us.
New apartment units are being rented out quickly, in fact, at the fastest pace in 3 years, according to the U.S. Census. Apartment construction took off in 2012 and reached a 20-year high in 2017. It remained elevated this year despite warnings that demand would slow as more millennials aged into their home buying years. But while demand for housing is high, so are home prices, and mortgage rates jumped this year, making home buying even less affordable. That will likely make more renters stay renters longer than they might have anticipated in order to save for a larger down payment. And it could also present investors with a relatively safe bet in a volatile stock market, namely the multifamily REITs, which also offer high dividends.
We do have a sector overweight call on the residential REIT sectors, namely apartments, single-family rentals, and manufactured housing.
One downside risk, mortgage rates appear to be coming back down again. They're still higher than they were a year ago, but if they fall further, more renters could possibly become buyers. For Nightly Business Report, I'm Diana Olick in Washington.
Drug maker Perrigo faces an unexpected nearly $2 billion tax bill. And that's where we begin tonight's market focus. The Irish drug maker said that it was notified by its own government that it owes just under $2 billion in back taxes related to an acquisition it made back in 2013. Now, Perrigo says it does not plan to shell out that amount anytime soon because it says the case is without merit and simply incorrect. However, investors nonetheless were concerned. They sent the shares lower by more than 29% today to 37.03. CarMax said that stronger the demand in its wholesale unit helped offset a decline in same-store sales caused by weaker foot traffic. Both profits and sales accelerated more than analysts had expected. So as you might imagine, shares rose. Today they were up nearly 4% to $58.96.
Chinese officials say that they will start to review new gaming titles for approval following a more than 6-month-long restructuring freeze. That's good news for the Chinese game developer NetEase. Investors seem to like the company's prospects. They sent the shares higher by more than 3% to $244.43. And Sprint will pay more than $300 million to settle charges that it intentionally failed to collect state and local taxes on its wireless plans that were sold in New York. Officials said it is the largest ever recovery by a single state in an action filed under a False Claims Act. Sprint shares fell 3% to $5.79.
This week's Market Monitor is betting that his 3 stock picks tonight will continue to gain market share even if the economy begins to slow. That's because he says they have strong management, pricing power, and they're at the forefront of technological innovation. This is his first time on Nightly Business Report. We welcome Stephen Lee. He's founding principal at Logan Capital Management. Stephen, good to see you. Thanks for joining us tonight.
Thanks for having me this evening. Interesting day.
To say the least. We begin with Masimo, one of your picks. This is a medical technology company. You like the demographics here, but you could say that for a lot of medical technology companies. Why this one?
Well, you know, stepping back, thinking on the way in, my team and I have been working together since the early 90s, so we've been through a few challenging markets. And one of the lessons we've taken away from that is when times get tough, the tough get going. So we want companies with nimble and experienced management teams, unique products, which Masimo has, and the financial ability to execute. And in all 3 cases, Masimo has that. They make non-invasive sensors, which what is that? There's those little things that go on your finger when you're in the hospital, right, that tell a patient's medical team what they do, and it gives them data, gives them the data they need to make better, to improve care and do it more efficiently.
You also like Nike. It certainly had a very good earnings report this week. But you also point out the fact that their customer contact initiatives have really helped it perform very well.
Yeah, and Nike fits the same general theme. That management team has been really aggressive on addressing the challenges of retail. So they've used technology throughout the business to find who their customers are, understand them, redesign their products, and really they've gone through and looked at all their partnerships for differentiated retailers. And I think it's worth noting that their sales in China were up, I think, a little over 30%, despite some of the concerns we're hearing around about China's economic growth.
Your third one is Apple, and I have to say, you're not alone. There have been so many money managers who have come on our program recently talking about Apple, even with this huge decline we've seen in the stock. The bulls like it because they see the services business side of the business doing well, but the bears are afraid of the slowdown in the handset market worldwide. I take it you like services, or is that why you like it?
You know, we like services and we like the wearables and we like the history of the company. When we started buying it in the mid-2000s, iPod was the product. And this is a company that has successfully obsoleted its own products and dealt with change. So we think as cellular networks get a lot faster with 5G coming, the devices we use to communicate are going to change. And, you know, the wearables business for them is only about 4%. But the watch connected to a cellular signal is, we think, an example of maybe how we're going to be doing things in the future.
In general, you feel as though all of these companies and their management specifically are nimble enough to handle the type of market volatility and perhaps economic volatility that's to come, correct?
Yeah, certainly. And what they have is they have products their customers really value and they're willing to pay a premium for. So if we start to see inflation, let's say the economy improves as opposed to goes over, they'll be able to push price increases through. And they're still addressing needs that their customers have, regardless of whether times are good or bad.
All right.
And they're pretty well seasoned.
Very good. Stephen Lee with Logan Capital Management. Thanks for joining us tonight. Appreciate it very much.
Thanks for having me. Bye-bye.
And to read more about Stephen's picks, you can head to our website at nbr.com.
Coming up, for those of you who haven't even started your holiday shopping, tick-tock.
I'm Courtney Reagan in Elmhurst, New York. If you haven't finished your holiday shopping, you are not alone. I've got the expectations for Super Saturday coming up on Nightly Business Report.
Here's a look at some of the economic numbers out today. The economy grew at a solid annual rate of 3.4% in the third quarter. That, though, is down slightly from an earlier estimate of 3.5%, as consumer spending and exports were both revised lower. Overall demand for durable goods produced in the U.S. rebounded last month thanks to a ramp up in aircraft orders, but the gain was only about half what economists had been expecting. And if you strip out transportation, orders fell by 0.3%. And consumers opened their wallets in November as personal spending rose nearly 0.5%. Personal income rose slightly last month as well.
Consumer sentiment also rose this month thanks to a strong job market, and retailers are hoping that that translates to this holiday shopping season. And the retailers are gearing up for those last-minute shoppers who are racing against the clock for the holidays. Courtney Reagan is in Elmhurst, New York.
Tomorrow could be the second busiest shopping day of the year behind Black Friday. The Saturday before Christmas is often called Super Saturday, a critical day for retailers to capture those final purchases before Christmas, punctuating the end of what most experts think will be a strong holiday season, despite the recent stock market sell-off.
If you look at the MasterCard Spending Pulse data, up until a day ago, we were seeing 5% growth overall for the consumer, and that compares to 2 years ago at 3% and a year ago at 4%. So we're having a very healthy consumer season. The next 5 days are make or break it for the retailers.
Even though the holiday season was as long as it could possibly be with the early Thanksgiving, the National Retail Federation says a quarter of Americans still have some shopping left to do. 134 million consumers are expected to shop tomorrow. That's up from 126 million last Super Saturday.
Yes, I'm done. I started last week.
We're going to be done today. We're going to do it all in one day.
I definitely hope to be done by Christmas Eve. I still got to get a couple things like some shoes, clothes, definitely all of that, some jewelry.
Jewelry, health and beauty, books, accessories, and gift cards are the most popular last-minute gifts for coupon hunters on RetailMeNot.com. A number of retailers are extending their hours for procrastinators. Kohl's is staying open for 83 straight hours. Most Macy's stores will open early and stay open until midnight through the weekend. Target CEO Brian Cornell expects Saturday will once again be one of its busiest days. Target shoppers can place online orders for store pickup as late as 6 p.m. on Christmas Eve. A long season and a year of planning is almost over for retail, and the last chance to wrap it up with a bow. For Nightly Business Report, I'm Courtney Reagan in Elmhurst, New York.
Before we go, let's take a final look at the day on Wall Street. Yes, it happened again. The Dow was down more than 400 points. Now we're below 23,000. The Nasdaq dropped by 3% or 195 points, and the S&P 500 gave back by about 50. Now, all three indexes lost at least 7% just this week. The Dow and the Nasdaq's worst week since the financial crisis of 10 years ago, and it was the S&P's worst week since 2011. My suggestion, don't bother looking at your 401k this weekend.
No, not this weekend.
Just focus on the holidays and be happy about it.
And be happy. Spend time with friends and family.
Merry Christmas to you, by the way.
And to you too, my
Thank you
dear.
very much. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks for watching.
I'm Sue Herrera. Have a great evening, everyone, and a great weekend.